Okay, Assalamualaikum and hi. Today, our group will talk about financial report on Digi company. Okay, so my name is Mohammed FIKHRI bin MAZLAN. Okay, so what companies do we take from Bursa? Okay, we choose Digi as our main source. So the financial report consists of three letters here, which is 2019, 2020, and 2021. So before we start, let me tell you about background of the company. Okay, Digi was established in 1995. I think it was 25 years ago. And Digi focused on growth, creating a long-term value. And apart from that, Digi also was a first telecommunication industry to operate fully digital cellular network in Malaysia. And before this, Digi was formerly known as Mutiara Telecommunications Sdn Bhd, but they changed to Digi company in 1999. So let's go to vision and mission. So what is Digi company vision? Alright, their vision is seen as a star in excellent customer experience and established standard of expected excellence. Alright, their mission is to providing customer specific solution and provide superior return to shareholder. Okay, so what is their objective? Okay, Digi company objective is create long-term shareholder value and best telecommunication services. So I give to you to AIMAN SYAKIR to talk about financial report on liquidity
Thank
ratios.
you so much, Muhammad Fikri, for your explanation. So we go to the liquidity ratio. In liquidity ratio, they have divided into two ratio. The first one is about current ratio, and the second one is about quick ratio. First one, we go to the current ratio. Overall, we find that the current ratio is declining drastically. This is because there is a lot of inventory accumulated in 2031 compared to previous year. This happened because in 2031, we are still in the pandemic phase, and we already know that Digi company wants to recovery economically. Therefore, the sales received are less, which result is a lot of unsold inventory. Because of unsold inventory, Digi has a shortage of cash compared to its high current liability. So, my suggestion is Digi company needs to ensure that sales management improve the way it promotes existing product to ensure that inventory is not excessive. For example, approaching the product promotion from Digi by making advertisement in public place and providing complete information. This is because now is the right time to reach out the people who need the best telecom to work and learn from home. In addition, the company must pay current liability with some cash. That will help to improve the current ratio. So, the second one is about quick ratio. Overall, we find that the quick ratio also decline within 3 years. This is because Digi is having problem in terms of paying off short-term debt by using current asset. And we can see that Digi relies on their inventory to repay the debt. It also take a long time for the liquid inventory turn into cash. Plus, the company also have issue in current liability for settling their debts. So, for my suggestion, I think Digi company need to make sure sell inventory for money because they are also lack of cash, and at the same time, it can help to have more asset in liquidity term. Next, the company needs to ensure that it does not produce excess stock so that unsold items are reduced. Furthermore, there is a need to improve the management needs to ensure that short-term debt payments are paid well to improve the company economy.
Next is efficiency ratio. For inventory turnover, we can see that from 2019 to 2020, the ratio is decreasing. But in 2021, the ratio has increased, meaning Digi has lessened their stocks in inventory compared to 2020. Uh, the suggestion is Digi should maintain and expanding their marketing and come up with more strategies. Next is total asset turnover. From the ratio, we can see that Digi did not over invested in fixed assets and use the assets efficiently. The suggestion are Digi should maintain their assets so their business will stand balanced, and Digi also can buy assets to increase their income. Next is fixed asset turnover. We can see that in 2019 to 2020, the ratio has decreased, but in 2021, the ratio has increased again. This means DG has balanced their investment in assets. Furthermore, the revenue is increased from 2020 to 2021. The suggestion are DG should sell any assets that are no longer valuable to increase the sales. And DG also can increase the efficiency of their products and producing more useful addition to their product. And lastly is average collection period. We can see that from 2019 to 2020, the ratio has decreased, but in 2021, the ratio has increased again, but not that much. The suggestion are DG has to be careful and monitoring their debt collection and not proceed with the current credit term. DG also should identify the customers that have problem in paying the debt according to the term.
For leverage ratio, it has three formulas. The first one, that is debt ratio. As you can see, in 2019 until 2020, it has been increased and then declined back in 2021. This because the company are getting more current liabilities compared to non-current liabilities. It also gives impact toward the company debt ratio. So for the suggestions, monitor their debt carefully to reduce their liabilities and should increase their sales or revenue to help them to reduce their debt. The second one, that is debt to equity ratio. This chart also shows that in 2019 until 2020, it increased and then declined back in 2021. The company are depending to debt financing compared to equity financing. Company also are risky toward the investors or shareholders. So for these suggestions, try to increase their annual sale and get financing through equity, which is stock or bond. The last one, that is times interest earned. As you can see, in 2019 until 2021, it declines for 2 years. So it has lowest ability to pay interest obligation using operating profit. If the company fail to meet their obligation to pay interest rate, this will be leading them to bankruptcy. So monitor the financing costs frankly, and this will prevent the company going bankrupt in the future.
Okay, the first one in profitability ratios is gross profit margin. Okay, as we can see, DG gross profit margin is declining. Why is this happen? This happened due to an efficient management of materials. And what can we do to avoid this? Okay, DG should enhance efficiency in material and labor management. And they can also lower the cost of items by analyzing and refining products that garner little reaction. The second one was operating profit margin. Okay, as we can see, DG OPM also declining throughout the year. Why is this happen? Because Digi company rely on their operation too much and they need to re-evaluating the cost of selling goods related to operation. So how can Digi improve? So this is one of my suggestion. They need to reduce the cost of goods sales and reduce operating expenses. Another one it was find a new raw materials at a lower price while the quality being offered the same. The third one was net profit margin. DG and PM also having a declining throughout the year. Why? Because they have intense competition with other telcos such as Umobile, Maxis, Celcom, and much more. So how can they improve? Okay, they need to further expand their products by penetrate a new markets. Another one was improve the internet network in terms of further expanding Digi coverage, like in a rural areas, Sabah Sarawak, and much more. The fourth one was return on equity. Digi return on equity also having a poor management. Why? Because due to Digi companies being inefficient in managing the use of equity financing from investor in growing the company. So how can they improve? They need to reduce the amount of assets used in company, and they also need to reduce utility expenses within the company. Uh, by this, the company will improve in another year. Okay, the last one in profitability ratios is return on assets. Okay, as we can see at the chart, Digi also having a massive declining on their return on asset. Why? It is because in efficiency of Digi's company in managing its asset to generate more revenue. So how can they improve? They need to constantly update the technology use and need to make more advanced technology throughout the year. Another one was this they can make Digi having a 5G network because there is no telco in Malaysia that has 5G network.
Thank you so much to Muhammad Fikri for your explanation about all profitability ratio. So the next part, we go to the market ratio. In market ratio, they have divided into 5 ratio. The first one is about earning per share. The second one is about dividend per share. The third one is about dividend payout ratio. The next is about price earning ratio. And the last one is about dividend yield. The first one is about earning per share. Overall, we find that there is a declining occurring in EPS. This is because most of the shareholder in Digi stock withdrew and invested in other companies. The reason why they switched from Digi stock was because they received a little profit over the 3 years, which made new investors less interest in investing in Digi stock. So, my suggestion to improve the problem of declining earning per share is that Digi company need to have a strong competitive to increase their profit and performance of the company in terms of improving telecommunication service, improve their internet plans, and increase their coverage in rural areas. This is because there are many telco companies out there that provide better telecommunications service as well as get their high demand from other companies to sponsor large scale event compared to Digi. In the event of stock price decline, investors should not take action to pull out from Digi share, but try to help Digi in providing ideas and finding the reason why the earning per share ratio is declined. The second one is about dividend per share. Overall, one of the factors driving the decline in this ratio is that Digi lacks funds to operate. We are well aware the COVID-19 pandemic has a huge impact on all sectors of the economy, making it difficult, especially Digi, to manage their business due to reduce sales revenue and difficult to pay employee salaries. Not only that, less investor in their share also affect the company's profitability. In my opinion, one of my suggestions to improve the problem that occur above is that Digi company should further in increasing dividends to shareholders to attract new investors to invest in Digi companies. This is because it can help in obtaining funds to continue the operations of the Digi company. Not only that, to earn higher dividends in the company, I suggest that Digi company to expand their product to the Asian market and create a variety of a new product, then can attract consumer and at the same time can satisfy the taste and comfort of consumer. In this way, it can help to some extent increase the company profit as well as provide the profitable dividend to shareholder.
Dividend payout ratio. This ratio is very popular with investors out there because with this ratio, they can find out whether the company is paying a reasonable share of net income to the investor. There will be an increase in the ratio in 2020 due to the tax imposed on the dividends being lower than capital, and this can attract new investors to invest in Digi. However, in 2021, Digi companies experienced a drastic decline with the dividend payout ratio falling from 104.5% to 97.9%. This happened because the tax levied on dividends for the year was high, resulting in dividends given to shareholders being less than the previous year. Price earning ratio. Price earning ratio for Digi company keep increasing from 2019 to 2021. Possible cause of ratio is when the price of stock rises and earnings remain constant, the PE ratio will rise. A firm with higher PE ratio usually indicates a positive future performance, and investors are willing to pay more for this firm share. The higher the ratio, the higher the investor's confidence. Recommendation to improve. Digi must always make comparison of the historical price earning ratio. Digi need to not to rely solely on price earning ratios when investing in any stocks. Also, paying dividends can cause a company PE ratio to rise. Dividend yield. Dividend yield for Digi company decreased from 2019 to 2021. Possible cause of poor ratio. This indicate that Digi company's stock price is increased because dividend yield is an estimate of the dividend-only return of a stock investment. Assuming the dividend is not raised or lower, the yield will rise when the price of the stock falls, and conversely, it will fall when the price of the stock rises. Recommendation to improve. Digi needs to maintain the dividend yield because high dividend yields might seem like bargain, but also has a risk, which is going through financial problem that might have caused their stock price to drop. Conclusion. As the last part of this project, we will analyze and assess the performance of a firm based on the financial statement that they provide. We decided to analyze the financial statement of Digi Telecommunications Sdn Bhd for our project, and the result led us to the conclusion that the company performance has been declining over the last 3 years. In a nutshell, Digi has shown a downward tendency during the last 3 years. The greatest contribution comes from the global pandemic COVID-19, which has been active since 2019. They also have gone through a recovery phase. Thank you.